What is the largest asset class in the world? Is it stocks, bonds, currencies, or commodities? The answer to the question is not on that list. The largest asset class is real estate, which from an economical perspective makes a lot of sense. After all, we all have to eat and sleep somewhere, and that puts real estate as one of, if not, the most important asset we have. Chamath Palihapitiya, the CEO of Social Capital, has recognized that real estate is undergoing a massive shift, and this, not surprisingly, opens up a huge investment opportunity. And no, I'm not talking about replacing real estate agents to technological platforms like Opendoor, Redfin, or Zillow. I'm talking about the apartment rental industry, which is an industry so large that the industry is estimated to have $173 billion in revenue every year. In this video, I will cover what company Chamath sees as a leader in disrupting the rental space, why he is investing in the stock he has chosen, and whether you should look into this investment. Welcome to Kazgains Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. If you've been watching this channel, you all know I won't drag you on into the end of the video to mention the stock Chamath is investing in. Chamath recently led the PIPE investment in an SPAC that is merging with a company named Latch. The SPAC has not merged with Latch quite yet and is currently trading under the ticker symbol TSIA. Now before you search this stock up or have preconceived notions, let me explain why Chamath is investing in Latch. He described the stock as the best software as a service company he's ever seen or invested in, and it's for a few key reasons. The stock has gone under the radar in the public's eye despite its fast growth, even during the pandemic. Finding and managing tenants is quite troublesome at times. For example, while looking for tenants, real estate managers have to constantly give tours to prospective tenants. This can be extremely time-consuming, especially for those that have to manage a large number of real estate units. Latch looks to change this through its lineup of products. Its business model centers around improving the experience of renting and renting out properties, and also improving profit margins for real estate managers in the meantime. Latch's most popular product is its R, M, and C series products. The R series product, also known as the R Reader, costs $400 upfront and allows users to unlock their apartment through the Latch app, an Apple Watch, a key card, or a door code. This will become extremely important as I'll mention later. The M and C series products serve about the same purpose, with each product different depending on the lock of the door. Both of those products are secure door handles that take pictures and videos of those who enter and exit the apartments. The reason why this is extremely important for real estate managers is that when you invite a prospective tenant over, all you have to do is grant access to the Latch app for a certain period of time. Just schedule the date and time that the prospective tenant is coming over and enter the prospective tenant's email, and they will be given a door code to enter the apartment. This is much more convenient than giving an apartment tour to prospective tenants who might not even be interested in the apartment. Additionally, real estate managers don't have to keep making new keys every time a new tenant replaces an old one. The reason why real estate managers do this is that keys can be duplicated and old tenants may still have access to apartments. With the Latch door handle, real estate managers no longer have to spend money doing this. The reason why Latch's business model is so strong is because of its recurring revenue. The price of the M series and the R Reader both cost around $400 to install. After those two devices are installed, customers now have to get a software service contract for Latch's software, which usually costs around $5 per door. This is very important for future growth as I'll soon explain. For the real estate owners, using Latch makes a lot of sense. Latch OS increases the revenue of apartments by around $200 to $500 per year and reduces expenses by $100 to $300 per year. This is mainly because Latch offers a premium experience, increases rental fees, offers security, and reduces rekeying expenses. With these astonishing numbers, it's almost a no-brainer for apartment owners to use Latch. Owners are beginning to catch on to this. In fact, as of 2019, 1 in 10 of all new multi-family apartments built in the US was built with Latch's services. Latch also has other features in its ecosystem, including the Latch Intercom, which allows apartment owners to talk to tenants on an intercom and vice versa, the Latch Camera, which allows property managers to oversee common areas in an apartment building, and the Latch Delivery Assistant, which allows large apartments to easily manage incoming packages. These products, along with additional features such as managing thermostats, can all be managed through the Latch app. Latch also plans to expand into other services on its app such as insurance and Wi-Fi management. Similar to a company like Tesla, Latch's software will only continue to get better and better for its customers. Before we get into Latch's rapid expansion, I have some exciting news for you. Patrons now have access to my exclusive in-depth reports on every move I make in the market. I recently published a page-long report on a stock I've been purchasing over the past couple of days, and all of this is real time. This is on top of the benefits such as seeing my exclusive portfolio with explanations for each position and obtaining access to my spreadsheet that helps you evaluate stocks. If that sounds interesting to you, or if you're just curious, check out my Patreon in the description below. Now that we understand what Latch is, let's take a look at why Chamath believes that the business has a huge amount of upside ahead. Latch's growth opportunity has 4 key pillars backing it up. 1. The market for an apartment building operating system is massive. 2. Latch is fulfilling the vision of the full building technological operating system. 3. Latch has very enticing customer traction and customer retention. And lastly, Latch has a significant amount of white space for rapid growth. In other words, Latch has lots of room to grow. First, to start with, there are 47 million rental homes in the US, and Latch has not even scratched 1% of the multifamily market yet. This includes 32 million multi-family apartment units and 15 million single-family rental units. The market for Latch's services is in a market worth $54 billion in terms of annual revenue and $90 billion if you include Europe. To emphasize the amount of disruption that still needs to happen, Latch's services are currently in 35 states in the US and will only continue to expand from there. With this much potential, it's no surprise that Latch has been growing extremely fast. Its booked hardware revenue has increased 413% from 2018 to 2020, and its software revenue has increased 546% from 2018 to 2020. Not only that, but cumulative booked home units are only increasing faster and faster, as there are now over 300,000 home units that use Latch. What's even more interesting is that Latch was able to retain 100% of its customers so far. As you can see, Latch has 100% gross revenue retention, which means that not a single customer has downgraded their Latch plan. In fact, they actually had their existing customers expand. Their net booked revenue expansion was 154%, which shows that customers are continuing to use Latch's other products. This fast growth is occurring for a few main reasons. 1. Bookings with new customers only continues to expand. 2. Existing customers are expanding. 3. Latch software is expanding, which creates additional revenue. And 4. Revenue services are expanding in the Latch app. Another major growth driver for Latch is the fact that Latch plans to accelerate its expansion in Europe with its SPAC partner Tishman Speyer. This is going to be huge for the company. There are 93 million apartments throughout Europe, which leaves a total market size of $90 billion available for Latch. The more interesting part is that Latch can leverage its partnership with Tishman Speyer. Tishman Speyer is the company that is leading the SPAC with Latch, which means it's in their best interest to use Latch's products. Tishman has a huge global portfolio of apartments that Latch will expand into. This includes $56.8 billion worth of global assets and 80 million square feet of space. Expanding Latch into these apartments is practically easy money, given that it's in Tishman's best interest to do so. Now that we know that Latch is growing fast and that its business model is solid, we need to take a look at its valuation. In the future, Latch is expected to grow 84% year over year in 2021, 123% in 2022, 51% in 2023, 38% in 2024, and 25% in 2025. We discussed earlier how Latch's international expansion and expansion with Tishman will drive extremely fast growth over the next couple of years. At the time I'm recording this video, Latch trades at just $12 a share, which implies a 20% premium from where Chamath invested in the company. This puts Latch's valuation at roughly $1.9 billion, as the SPAC was at a valuation of $1.5 billion. Just to be clear, investing in the ticker symbol TSIA will mean that you will be invested in Latch when the ticker symbol changes. At this valuation, Latch stock has a price to sales ratio of 11, which is relatively low for a company expected to grow this fast in the coming years. Latch expects to grow its revenue to $688 million by 2022. This puts Latch's 2022 price to sales ratio at roughly 2.7. Assuming Latch is valued at a price to sales ratio of 5 by then, this gives a clear path for Latch to 2x in 2 years. Additionally, by doing the same calculations, but with a 2025 price to sales ratio at 4, Latch will have a clear path to almost 4x in value in 4 years. This is, in my opinion, extremely attractive, but you should always do your own due diligence. This definitely isn't financial advice, and you do have to keep in mind that this is a growth company and margins are not expected to become profitable until 2024. From 2020 to 2023, Latch is expected to lose roughly $60 to $120 million per year before taxes, depreciation, and amortization expenses. Overall, if you're looking for a growth company that has solid prospects relative to its valuation, Latch is a stock that you should look into. If you're interested in seeing my full stock portfolio with explanations, check out my Patreon down below. Also, if you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.